Hi, today is Sunday the 23rd of February and this is the SPX Outlook for next week. This week has been a welcome change from previous weeks as we have now some profit taking going on after the market reached almost like 3400 on Wednesday. Incidentally, it was when the FOMC minutes came out, but also maybe some concern about the coronavirus spreading around the world and, of course, affecting economic growth around the world. Whatever the reasons, we are here to see from just a technical standpoint how the market is doing. So the market went into a long overdue correction, and on Friday it did not reach the 33.25 support area. Pretty strong. That's where it was on February 7th. So what can we see here? We can see that this strong resistance has held all along. This is the 1 hour chart, by the way. And it should now find this cushion here, too, of course. We see also that as we are now familiar with the 40-point gap, quantum gap from 3360 to 3400 is still valid. And we have probably again the market aiming for the 3320, 3325 area. That being said, market is now, at least in this time frame, already quite oversold, so we may see a bump, the market bouncing off from here. The strongest support level is definitely around 3280, so if this one breaks, we may then go for the 3300 or 3280. And here we see that we have even here, or again, the same 40-point gap. Anyway, this is a very short-term outlook, probably good for Monday, Tuesday. So I would say for Monday, Tuesday, maybe some momentum or leftover of bearish pressure taking the market to the 3320. I don't think it will go lower, but it is of course possible. The good thing is that this overall range is back to being absolutely valid. If the range is now confirmed, it is even likely that at some point, the same way as 3360 was tested for support to aim for the 3400 area, it may go and test 3360 again to come down again. So I would expect on this short time frame, so I'm really talking Monday, latest Tuesday, some bearish congestion here, possible acceleration if the 33.20.25 is broken, otherwise aiming back to 33.60, and if it's then tested as a strong resistance again, it will then aim south again. Anyway, this is a short-term outlook, very short-term outlook, so let's move on to the 4-hour chart. Similar picture. Here we have a sell signal that is picking up momentum. It started almost in anti-correlation to price action, but that often happens. And as a matter of fact, it is a strong re-entry from this first warning. So on this chart we have a similar picture. It's just looks a little bit more bearish, which would mean that if it happens the way I projected on the 1 hour chart, we would then go on a 4-hour chart, try and go lower. I have plotted this parallel line here just in case we have a lower channel forming, since this one, the very bullish one, has been this one first, the top one has been broken and it went back into this channel just lower. So could it rise again in this new channel? This line is not, of course, not very clear. There's only one point to base it just as a parallel line, so we will see. But that would also indicate that if 32.25 is broken by Monday, Tuesday, there will be some acceleration, because it would mean that this channel is also broken. If we plot this rather unusual fib expansion pattern, we see that we have a potential return to 33.20, first test level, 33, 15, 20, 25. So we have that test area here, and then it could drop to 32.60, very strong, as you can see, pivot level here. This was a previous range for a while, and it could then fall to 3200 or thereabout, which is about the lowest here, 3215 on January 31st. So we will see whether we've got that acceleration. Then it would go, as I said, to 32, 60, 70, maybe 80, and then maybe lower. At this point, there's no indication it will break. The more natural course of action would be to stay in this channel, but we will see. So this outlook, slightly more bearish than on the 1 hour chart, is probably valid for a couple of days, maybe Wednesday. And now let's have a look at the daily chart. And we see on this daily chart that this chart is also going south. So this would mean that finally there's a chance of this market going into a more bearish mode, and we maybe to go and test this strong support area on the 3200. So this one will probably take a bit longer to form. We can't discard that those short signals, even though they were valid, they were probably hard to trade because it moved back into the trend. Same here, but this is a fairly good signal when it's bright red here, so we must actually take it quite seriously. And of course levels are about the same here. We notice that we have the first resilience here on 3270. So again, this support area 3260, 3070, maybe 3280 is to be considered. And then it would probably, if it falls, which would mean that the bulls are kind of giving up momentarily, it would go back to the 3200 area. So to wrap it up, we have possibly some bearish congestion, trying to extend the channel, maybe testing 3260 again, and then if it breaks this channel again, then it will go south. Okay, that's it for now. Tomorrow I will record for members of the class the weekly recap. Okay, thank you for watching, and bye for now.